Good morning, folks, and welcome back to Almus Market Mornings. The new round of negotiation between Iran and US will start today in Doha, but that's what the US side thinks because interestingly, the Iranian side has not confirmed this. And moreover, the Iranian deputy foreign minister has said the Iranians have no plans to meet with the US. The deputy minister also said Iran is working with Oman to jointly oversee movement of ships via Strait of Hormuz. Markets, on the other hand, seem to be on the yen watch after it slid to a four-decade low against the dollar, breaking the 162 mark. There are now who are expecting some intervention by the BOJ. Uh, Good morning, Pankaj. Great to have you back. What are you following in these last couple of days, which you think is a market mover?
Hey, thanks, Swaraj. Thanks for this opportunity to connect with all of you. Uh, my sense, I'm still driving that the most important factor which market would be looking forward. I'm not knowing the timelines of these, but Kevin was task forces, and particularly two points. I'm very curious about how these things will go. One is basically his task force on looking at the Fed balance sheet. He firmly believed that the large balance sheet is impacting overall economy and the asset market, and particularly liquidity. That's one. And second, the factors driving the inflation at 2%. So these two task forces I will be looking at. Uh, I would say that the current market, again, I'm looking at also is basically after the truce being called off, maybe some isolated events here and there. Uh, Even after the fall of in crude oil and other commodities, yields have not reverted back to the pre-war level. Yields are still staying higher, and that's where I'm watching for. So according to me, global yields and the inflation, which need to be watched for the further action, and we can definitely look at even after commodity sell-off, these things have not yields have not cooled off, and equities are doing pretty well. I firmly believe that equities are generally a inflation trade, higher inflation, higher equities, and if it's supported by the lower interest rates, which currently basically market is pricing it, but not pricing in a very aggressive interest rate hikes. So no, that's where the equity is getting their lifeline along with the so-called AI trades. So that's what I'm looking for and watching for. Coming back to the general and not general, daily commentaries. As you highlighted, dollar yen crossing 162. I read somewhere that finance minister of Japan and even Scott when they discussed last week, they probably market is looking for an intervention in dollar yen. Are we very closer to a big intervention? I'm not sure, but yes, market would be looking at that, and market would not have anticipated that even after such statements, dollar yen is easily crossing 162. That's indicating that the Japanese economy is not doing that well. Um, Yes, you also highlighted that there is a meeting which is planned in Doha, Qatar, basically Qatar or Oman, I think. Yeah. So no, no, in Doha, and probably Iranian side is not willing to join. But at the same point of time, the comments which have been coming from Iran side is very clear that they will be watching the movement through Hormuz. Market will be well settled and calm if Hormuz traffic is flowing in easily. They are not much concerned about the isolated events. Mm, Coming back to India, we are seeing a two-way movement in dollar rupee, 94, 94.20. I think there's a rock solid buyer already there and probably accumulating dollars. And at the 94, 70, 80, looking at the overall kind of announcement with respect to FCNR, expected leverage trades, expected inflows, and a good amount of inflows which is ticking in government securities after these taxation waiver of. Uh, we are seeing, as of now, a good movement between 94, 1020 to 94. 80 yesterday we saw a kind of a attempt again breaking 94.20, which probably have been halted by a rock solid buyer. At the other side, I think exporters and the regular guys would also be selling dollar P. Till the time we see a major up move in dollar index, I think 94, 80, 90 is a regular supply coming in. So that's where in a dollar rupee, Indian equities have again taken some kind of a knockoff of a quarter end profit taking. I believe Indian equities also in a range till the time we start seeing a good amount of equities flow coming into India. Uh, yeah, gold. The other thing I'm watching probably, and I'm also curious about whether the Kevin Warsh has killed a debasement trade, which is basically selling dollars and buying other assets, and particularly a gold kind of alternative currency. Gold is unable to move above 4,100 in last 2 days, and again on a drop below 3980, 3970. So, watching that precious metal trade as well. A break, probably if it's not able to cross 4,000 by today afternoon, above 4,000 by European time, we are likely to see 3,870, 80 on gold. That's all from me, Swaraj. Any other question if you have, we'll be happy to answer.
Yes, Pankaj, two questions for you. So first, so after the Fed meeting, of course, everyone in the market, they have interpreted whatever Kevin Warsh has done. At the same time, the dot plot is very hawkish. Do you think, of course, central bankers are meeting this week. I think with Portugal, there is a sort of a conference. Do you think he may utilize this conference to set uh, basically a softer narrative, or that was his intention to be like his intention was correctly interpreted by the markets in the first go itself?
So definitely market would be looking for a soft indication from him. Probably I've read somewhere it's going and it's been called as a calling off the Warsh bluff. I have a doubt. In one meeting, somebody cannot set up their credentials. So I don't see that a softer side of Kevin was coming in very soon. But at the same meeting in FOMC, after FOMC meeting also, he put up a thoughts, but even he has nullified those thoughts by saying that inflation is fine, the crude oil is coming down, we might have a softer reading of inflation. So
Mm.
my sense is it's very early to say that Kevin Voss will be softening his narrative. I'm not in that camp.
Okay, understood. And second last question on the FCNR deposits. Generally, there is, I think, an estimate that 30 to $40 billion of flows will come in due to this thing. But I think while everyone focuses on returns and how attractive the entire scheme is, uh, from from a balance sheet point of view, it is a liability, right, for the government, for the RBI. So would rupee appreciation be a base case in such kind of scenario? As we have also been seeing past few days, 94, 10, 20, good amount of accumulation is happening. So those flows likely getting absorbed, dollar index is weakening, so rupee undervaluation automatically getting corrected. How are you reading all of this?
So again, my sense, there are different matrices to value currency at different point of time. Um, the current metrics of a rupee undervalued is purely driven by inflation differential theory, which is RER. But the most important and critical variable, or maybe a theory which need to be watched, is demand and supply. And rupee supply vis-a-vis dollar thing. So what I'm the Indian entities or Indian as an economy has been significant demand for a dollar, and that's the reason dollar keep going higher, because we are not seeing a good amount of a supply coming in. So this scheme at this point of a time is bridging the gap of a demand and supply to a certain extent
Hmm.
by channelizing basically a dollar supply by giving an attractive returns. You also believe in cycles, because we have been a kind of a bad cycle on a rupee due to equity overvaluation on a war-related effect, whether it's a Russia-Ukraine, and then it's basically Iran-US. So that's a period where the supply has got into a deficit. Probably RBI is playing a role to smoothen this demand and supply game by putting up this leverage, probably allowing people to leverage these money and bring into India. Yes, it's a overall liability, but if the period of a good inflows come in next 3 to 5 years, then it will normalize. So my sense is, and that's the reason we are not seeing a significant amount of appreciation due to increase in a dollar supply, also expected increase in a dollar supply. But RBI firmly believe that we need to accumulate these dollars to pay off the future liabilities. My sense, even due to this scheme, whatever amount of money coming in, I'm not expecting dollar rupee to break below 92 half, 92.80. Let's see how the money coming in at this point of a time. 94 itself becoming a very good amount of support. So yes, market anticipating a higher amount of maybe average somewhere is above north of a dollar, $50 billion, $60 billion. And probably that will only allow rupee to appreciate a little, or maybe a closer to 93 types. But any number which is lesser than on a $40 billion, I think dollar rupee probably will not even break 93 half. Yeah, that's all from my side.
Right, right. Thanks a lot, Pankaj. Very interesting conversation. Folks, that's it from us. We'll catch up tomorrow with a fresh round of updates. Thanks for listening.
Thank you.